Welcome to New Business Guide. This guide is for business owners and covers several topics that you should understand when running a business. Even if you've already started your own business, it can be a great resource to help you better understand concepts that may not have been explained to you and will help you better run your business. This material has been prepared for informational purposes only and is not intended to be a substitute or to provide tax, legal, and accounting advice, and should not be relied on for tax, legal, or accounting advice for your specific situation. You should always consult your own tax, legal, and accounting advisors before engaging in any transaction. My name is Josh Stanley, and I've been a dedicated accountant to small business owners for over 10 years. I'm an enrolled agent, which is the only federally licensed credential for tax practitioners. Enrolled agents are granted unlimited practice rights and are authorized to advise, represent, and prepare tax returns for individuals and businesses alike. I'm also an accredited business accountant/advisor, which means I understand financial accounting, financial reporting, financial statement preparation, taxation, managerial accounting, business law, and ethics for small to medium-sized businesses. Small business is my favorite area of practice. As a small business myself, I'm able to understand their unique situations and needs, having been through them myself, and I enjoy helping them develop, maintain, and grow their businesses into the companies they dreamed of when they decided to take the risk and start their own business. Starting a business can be one of life's most rewarding experiences. However, it can also become a disaster. Statistics show that 85% of businesses fail in the first 5 years. This presentation is designed to help you succeed by starting you off in the right direction with the knowledge necessary to understand how to run your business. The biggest piece of advice I give new business owners is to keep excellent records. This alone can make or break a business. Record keeping is not only essential, it's required. You're expected to pay tax on your profits every year. Banks may require you to report how you're doing if you borrowed any money to start your business, and more importantly, you need to know if you're profitable or not. The main two items you're going to keep track of are your income and expenses. There's several ways to keep track of these items, and you can use whatever system works best for you. The success of your business depends on maintaining great records, whether you're a sole proprietor, partnership, or corporation. The simplest way to track these items is by opening a business checking or savings account and making sure you deposit all income to the account and have all your expenses run through it. You can also apply for a business credit card as well. It's very important that you do not commingle or mix personal transactions with your business. You should always keep your personal expenses separate from your business, no matter what kind of business you are. You should treat the business like it was someone else's. One of the biggest misconceptions when a small business owner starts is that everything now suddenly becomes a business expense and is deductible. I can't tell you how many times I've seen businesses trying to deduct every meal they purchase, including groceries for the household, daycare costs, new tennis shoes, clothing, and everything else under the sun. So, what expenses are deductible? On the screen is a list of common deductible expenses. This list is not all-inclusive. However, the general rule is that if the expense is ordinary and necessary for your business to operate, then it's probably a legitimate business expense and deductible. Not all expenses are created equal. Some have to be depreciated. So what is depreciation? Simply put, depreciation is dividing a large asset or expense over its useful life. For example, when you purchase a vehicle, you may have to deduct a portion of it over 5 years instead of writing it all off in the same year. It's important to understand this concept because knowing this will change the way you spend your money and can help you plan for future expenses. Remember, not all expenses are created equal. If you operate your small business out of your home, you may be entitled to a home office deduction. There are 2 ways to take the home office deduction, and each method has its advantages and disadvantages, which is beyond the scope of this presentation. With method 1, you can take the square feet of your home office, multiply it by $5 to come up with your total deduction. The maximum amount allowed under this method is $1,500. With method 2, you can take a percentage of your rent, mortgage, interest, utilities, garbage, repairs, taxes, insurance, etc. When it comes to vehicle expenses, there are 2 ways you can potentially deduct the costs. You can take the standard mileage rate or actual expenses. With the standard mileage rate, you take your business miles multiplied by the yearly rate to figure out your expense. Each year, a new rate is established. When you take the actual expense method, you'll need to maintain records of all your expenses and apply a business percentage. Meals while having a business meeting can be deducted using the actual cost. However, only 50% of what you spend is deductible, so you don't want to go overboard using this expense because it's not the best deduction. Make sure to keep track of the time, date, place, amount spent, your business purpose, and the customer or client you entertained. This expense must be ordinary and necessary. For more information, you can visit us online at www.dkkaccounting.com or check us out on Facebook or Twitter for free tips, tricks, tax updates, and helpful resources. Thanks for watching. Have a great day.